We have to switch gears internationally now. China's attempts to boost its economy have drawn little enthusiasm from investors. Trading volume was low even after the People's Bank of China announced an interest rate cut today, and news of potential stimulus had minimal effect on markets. Investors had high hopes for China. The economy was expected to spring back to life after a tight COVID lockdown. But the market has steadily declined, entrenched in a bear market for more than a year. China's roar back has been more of a bit of a whimper here. So how will the nation's push to fuel economic prowess affect other world markets, including our own? Back with us, we've got Chris Harvey, who is the Wells Fargo head of equity strategy. So how does this show up in the numbers for U.S. companies that are also looking at China's economy and for their relationship with consumers or contracts there with other businesses where they were anticipating that this could be a net beneficiary for them?
Yeah, so let's take a step back, right? A lot of investors played the reopening of China. They thought, hey, this is going to be great, this is going to be fantastic, and people did make a lot of money. But the problem is that reopening didn't translate into something bigger, broader, which is why China is now talking about the stimulus. It's unclear if the stimulus is going to work, right? Is it going to filter back into the capital markets? Yeah, I think at the margin, it adds liquidity. It's going to add a little bit more on risk-seeking, risk-taking, but it's still a big question mark. And one of the things that we've been talking about since the end of last year is the U.S. consumer had gorged on goods, right? What does China do? It produces a lot of goods that we buy. And so as a result, what we're seeing with the U.S. consumer is a change from goods to services. That's not real positive for China. That's one of the things that people aren't really talking about, and something that you really can't fix with stimulus at this point in time. But to answer the question, I think the stimulus will be helpful. I think it will be positive, but really it's just a marginal issue. As we've been talking about all morning long, it is really about AI. It's about the adaptation of AI. It's about the Fed and Fed policy, and what's happening in China is nice, and it seems like it's going to be a positive, but it's not a real big factor in what we're seeing right now.
I mean, how concerned are you about, for example, U.S. companies that are quite dependent on the Chinese market? I mean, more in Europe, but we've been watching the European luxury companies that have really been falling and rising as we've been getting headlines out of China. Yeah,
so we are still worried about the Chinese economy. We are still waiting for it to accelerate. And companies that are tied, their end markets are tied to demand in China. On the consumer side, I think it's okay. But on some of the bigger picture issues, I think it's a wait and see. It's not clear what's going to happen, and that economy has been struggling for some time.